You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out with the option block, the rockinest of all option shows. I can keep going with the rock metaphors and illusions, but we got lots of good stuff to talk about on the show today. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting radio network. If you like this show, there's quite a few more for you to choose from. Many of you already subscribe to the network feed, so if you do so, thank you. Keep on doing that. Keep on doing what you're doing. If not, make sure you head on over to wherever you listen to this, iTunes, Google Play, wherever you get the show, and upgrade yourself. You're worth it. All the way over to the full network feed. Get all of our shows. You never know what's coming down the pike from us. Some cool stuff could be in the works. You don't know. You won't know until you subscribe to the network. And of course, if you'd like to get this show, you can't wait for the podcast. You want to get it live in your ear holes right away. Easiest place to do that is the old Mixlr, MIXLR. Grab that link, set it, and forget it. I was noticing they were having some bugs today, so hopefully it seems to be working now. So hopefully if you're trying to get in the live and you're having issues, let us know. It's not us. We don't really run it. We don't own it, so we can't fix it. But we can try to work around, or at very least let them know that their servers are having problems. And hopefully that seems to have. Hopefully we'll see. If you guys are hearing this live, then it works. If not, then you got to listen to the old podcast. C'est la vie. But we'll make sure we'll get something ironed out for you guys. Hopefully by tomorrow for Twifo and Vol views at the very least. And joining me, of course, as usual, my usual cohorts. My usual cast of characters here on the old program. Starting off, Mr. Rock Lobster, I was just talking one state over. I was talking to New Hampshire about an hour ago. Now I dial up and I go one state up the chain to Maine, where it's even snowier and colder, where we can welcome on the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. How go things in the snowy Arctic tundra of Maine?
I have to say they are snowy, Arctic-y, and tundra-y. We have all of the cold adjectives locked up.
There you go. We're creating our whole new suite of adjectives for cold. It's so cold, the common language, the common tongue will not suffice. We need to create our own adjectives for how cold it is. A little warmer. It's in the 30s here, a little bit above freezing actually in Chicago. So there you go. Nice and warm. No bomb cyclones, whatever the heck they called it over east. None of that for us here this week. The nice tropical, balmy 32 degrees. Speaking of tropical and balmy, it's always 72 and sunny out there in St. Charles, where we are joined by the balmiest of people, Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. How go things in 75 and sunny St. Charles?
Oh, gotta love it. Every day's a holiday. Every meal is a feast. Ready to block some options, baby.
All right, then, let's do it. Let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down the week that was and the day that was, really. And a lot going on. The day kind of ended up kind of unched, kind of like, taking a bit of a break after an exciting earlier portion of the week. Most of the major indices pretty much closing unched or slightly down. The Dow, the leader of the laggards, off about nearly 80 handles. Everything else pretty much unched on the day. S&P off 4 or 5 handles, somewhere in that range. Q's almost literally unched on the day. And VIX cash settling out fairly robust, even if it ended up the day pretty much right around unched as well. But we're well north. We're into the double digits again. So for all of you playing the keep track game, which I know a lot of you are, we are well north into the 11 and 12 handles. Flirted ever so briefly with 1240, nearly 12 and a half today. So all of a sudden, got a little bit of vol out there in them there woods. And ended up the day right around where we started, right around 1185 or so. Got as low as 1162, but never flirted. Even came close to single digits. I'll have to go dig up my prognostication for vol views. But I don't think I was picking in a 12 handle, so we shall see how that works out. Still got another day, so we have a lot more time for us to for things to move my way. Really, let's start, since he's frozen out there in the tundra. Let's warm him up, talking some vol and some VIX. Mr. Rock Lobster, what caught your eye in today's activity, sir? And all this explosion of vol. I mean, a 12-handle VIX. How can you even deal with so much volatility?
I was about to say, can you say 12? You have to. When was the last time we said 12 and VIX in the same sentence?
I'm sure Mr. Rhodes, when he comes on the show tomorrow, will have that exact date, but I'm going to guess it's somewhere around Q3.
I mean, oh my gosh! I had to because when I teach vol trading, I teach by zone, right? Because zone 1 is like 9 to 12, right? Whereas you're into, well, it used to be like 10 to 13, but I had to move everything down a tick because now we have 9 vol. We've been in zone 1 almost the whole year, and our clients are happy. We managed to make some money doing it, but now we're actually crossing out of 1, and there's new procedures of stuff to do here. So it's almost like I get to dust off a second playbook for higher vol. So higher vol generally is a little more opportunity. So that part has been good. But the real funny thing is, what is causing the vol? The only thing I can think of is the government shutdown. Everything should be shutdown related. Personally, I live in Maine, so a government shutdown, we're not going to – it doesn't matter here.
That's a random Tuesday for Maine, right? The whole state is full of just raging anarchists and libertarians. They don't care.
Yeah, it's a third world country with really good roads, if you think about it, right? We got the natural beauty, and we have a fairly reliable power grid thanks to the CMP, which I don't know how they keep the state going in power because all these trees are always falling down all the time. But anyway, so yeah, we have vol. We had tremendous rally yesterday, 2,800. I think we were just talking about 2,500 about a week ago. So you've got all this, it has a little bit of that mid-90s feel where you get kind of that upward vol. You've got some pretty animal spirits running through the market again. And I think that you kind of have to own options in this market, what we've got. So I think just because of the shutdown thing is adding some vol. And then if there's some sort of resolution, then that vol could go away. But if we keep rallying 1% on nothing, like yesterday, I'm still trying to figure that one out. We gave back none of that, even though the political news is still not great. So overall, economic outlook still looks very good. Stocks are now, instead of in the old day, even 5-6 years ago or 4 years ago, they weren't really trading at much of a multiple. Now they're starting to put a multiple on earnings. So we'll see how long it goes. But I would be surprised if the VIX lasted at this level through the weekend if they come up with some sort of budget resolution, at least short term. We could see it get smacked down pretty hard next week. So that's kind of how I'm leaning. But you could always surprise everybody like, oh, they're going to shut the government down. And then everybody turns around and looks like, oh, it's okay. It doesn't matter. But we shall see. Why they can't do anything without shutting the government down when they just have to pass bills? I've never quite understood it. Can you imagine, we're going to shut the show down if you don't do what we want? Nobody get anything done.
And just to clarify for our audience, you say the VIX these days has a mid-90s feel. Are you saying we're leading up to a period of explosive, irrational exuberance, followed by plunging recklessly off a cliff to our own demise? Is that what you're saying, or are you alluding to something else?
I'm alluding to right now. That's still feeling very bullish, and we're getting a little volatility with the bullishness. I started seeing that at the end of last year when all the big QQQ stocks, all that midterm vol, long-term vol was lifting way off of year lows. So they were putting some premium in the fact that the market was moving like November, December, and it's bared out, I think, at this point. So anyway, it looks like we have more of the same. So to me, that's just, you buy VIX call spreads and you just buy stuff everywhere else and you just watch everything play.
Speaking of more of the same, we're getting some, the Skype gods are not smiling on Uncle Mike again over there. I'm not sure. It sounds like the train is just rolling down the tracks with him strapped to the tracks there in front of it. Uncle Mike, are you with us there? Can you hear us, sir, amidst the hurricane that is apparently descending on St. Charles?
I can hear you. We're doing well.
All right, sir, what caught your eye in today's activity before the hurricane sweeps you off the earth?
Before the hurricane sweeps me off the earth, what caught my eye is definitely the vol coming up. We've been somewhat range-bound this week. We did set new all-time highs, of course, but we're right around the all-time high. But I think the fact that we just have some type of anemic volatility in existence now is something to definitely make note of. And I'm with Andrew in that the only thing I could see that's raising the volatility is the government shutdown possibilities, because this is one where I remember we've talked about on the show, and we've gone through some government shutdowns and shutdown threats in the past. We could be in for more volatility tomorrow, just depending on what the news says throughout the day. This is we could actually have market moves on news, which is something that we really haven't had in a while. It's just been up. Nuclear war, no big deal. Let's go up. Let's buy more. So tomorrow, I think, is going to be a rather interesting day, just kind of watching what the news feeds say, as well as seeing how the markets react to it. So that's what is kind of lighting up my tape right now, or what I'm looking at this point. In general, I've actually, and I'll talk a little bit more about the strategy block, but I'm kind of taking a few things off the table now in some of my strategies. Number one, because we've had a really nice run the last couple of weeks. But number two, by taking something off the table, what I mean is I've been selling some premium against some calls, and with the higher volatility, it's kind of made it something to where I couldn't resist in terms of from a risk reward standpoint. But to hear more about that, stay tuned for the strategy block in a couple of blocks.
The Permabull taking some stuff off the table. Should we read into that alarm bells, sir? Are you the contrary? Are you the canary in the coal mine? That it's time for the Super Bulls to get the heck out of Dodge, or at least buy a put?
I am long-term bullish, short-term cautious, and I am just being short-term cautious and taking advantage of some opportunities right now.
You know where some other opportunities are lurking. As Uncle Mike alluded to, it is earnings season, which is always a refreshing breath of fresh air when we're talking about all this macro nonsense and who tweeted what and the will they, won't they. Is there something refreshingly discreet about an earnings season, an earnings event? It happens. There's a number, there's a straddle, there's a movement, there's a vol. It's all very concrete, and you can sink your teeth into it, which is somewhat refreshing in this day and age. We got some names popping off. We had Goldman before the bell this morning, so all you liking financials, and a lot of financials kicked it off on Friday. Goldman kicking it off again. Bank of America before the open here today, all contributing to the big unched on the day, at least from the indices perspective. But after the bell, we do have a little. Actually, that was Wednesday. Excuse me. I'm looking at it. But today we had BNY Mellon this morning before the open. Key banks, a lot of financials, Morgan Stanley continue to pop off. After the bell today, we got a name you may have heard of called IBM. Not as much in the consumer facing as they used to be, more in the services, but still a big name, obviously. In the tech field, they closed today 169.12 or so, up about 0.3%. They were pricing in a little over $7 for that at the money straddle, so a little over 4%. I wonder if I still have that chart from last week where I could see historically exactly how Beamer has performed. Let's see if they have it in their chart. They do, actually. They have IBM has an average. This is, of course, my friend over there, Cowan, who put together this interesting data we talked about a little bit last week. They were pricing at the time about 3.5%. That's come up to about 4.2% now. Their average implied move over the last 2 years for IBM, again, according to Cowan's data, has been 4.3%. So they're pricing it in almost exactly in line with what they had. And yeah, the average actual move, 4.2%. Lo and behold, what did they price into this cycle? Exactly 4.2%. So they're pretty much got it spot on, at least with the historicals. And let's look here at the after hours. Remember, I said, listeners, that was about a $7.20 straddle or so. And in the after hours, they're off about 3%. So 3.25% right now. They're off quite a bit, actually off about, looks like not quite 6 handles, about 5.5 handles here in the after hours. So pretty decent move, not quite as aggressive as perhaps has been priced in, but still, the night is young, as they say, and there is more time for them to keep moving. Speaking of keeping moving, the big story of this week was kind of, I guess you can call it crypto apocalypse, crypto reckoning, call it what you will. The week kind of kicked off badly for cryptos there. I think on Tuesday was really, really bad day. I was looking at the numbers for Tuesday alone. We had Bitcoin off 20%, Litecoin off 19%, Ethereum off 22%, Bitcoin Cash off 24%, and Ripple, everyone's favorite good old Ripple, off 35%. Again, this is just one session, listeners. So not exactly good day. Some of those sell-offs have been erased with some gains. We're seeing good old XBT, which is the SIBO Bitcoin future, hovering around 11,700 right now. So bouncing off some of those lows where I believe it broke 10,000. Briefly at one point there, so a lot of people wringing their hands. Oh no, the end of crypto, the death of crypto. A lot of people hitting us up this week again, asking us, specifically this week, hey, where the heck are these crypto Bitcoin options? What a great week it would have been to have them. I did have a chance to actually pass your questions along to the CEO of the CBOE earlier this week. In fact, the day everything was selling off so terribly. And he kind of made it sound like they won't be coming for a while, which is kind of in line with what I thought around Q2. He mentioned that they have to complete their migration. This is for SIBO. CME could do something different, obviously, but they have to complete their migration of the BATS technology, the old SIBO platform onto the BATS technology. That probably won't happen until sometime around Q2. And also, he said they want to get a few settlements under their belt. They just had finished their first settlement of the futures this week. So they want to get a few of those under their belt to make sure everything's working. And then they want to finish their technology migration. So it sounds like for all of you who are hoping for an early Q1 launch of Bitcoin options, as awesome as it would have been to have them this week, doesn't sound like we're going to be getting them anytime soon. Mr. Rock Lobster, we'll start with you. Any thoughts about Beamer? Is that lighting it up in the pit chat, or are people kind of at the Beamer? And then I'm sure they're going crazy for all this crypto. What are your thoughts there on this kind of crypto sell-off and then a bit of a rebound here later in the week?
As far as IBM, we're looking at earnings. Mostly, I think people just didn't like IBM at all because it has earnings and disappoints everybody and goes down. Isn't it like, 14 quarters in a row or something? So I don't think again, you know me, I'm not much of an earnings player, but it would not surprise me. Is this the one where they don't are going to report a sales crash? Also, as far as cryptocurrencies go, I'm waiting for the next. Every time Bitcoin or all those currencies look down in the dumps, they always somehow come up with some sort of rally. But this one has been a little bit slower. There's some governments kind of giving them trouble. So it's still kind of amazing that it was 19,000 and now it's 11,850. So that is still, so what's holding it up? And I just keep thinking, they only created so many Bitcoins, and if a bunch of people want not many Bitcoins, what does that do to the value? So now people are just looking at other products that haven't had the massive meteoric rise that Bitcoin has. So they're basically going for the cheapies, it looks like. Whatever the other currencies are that are not $11,800, they're going to go for like the $20 ones and the $50 ones, and all the other stuff that can be just squeezed just as easily. It's kind of like the old IPO thing where you put 10% of the float out and then watch everybody bid it up. It kind of looks like the same thing to me, except you don't get a company, you get a Bitcoin. So maybe I don't see how the rally in these things last. But I mean, if you're taking Bitcoin as payment and it's swinging this much, you're starting to, for somebody that's a payment processor, you're starting to take some pretty substantial slippage risk.
Yeah, you got some huge intraday currency risk on this. You sell your product
$1,000 a day.
Yeah, you sell your product for whatever $500 in the morning. By the afternoon, it's $200. By the evening, it's $3,000. That's going to hurt the notion of this being some sort of de facto currency when literally the value is moving 35% a day. That's not exactly tenable for the underpinning of an economy. By the way, speaking of cheap ones, Ripple. Well, Ripple was the cheapie. That's the one everyone's talking about these days. It was under $1 briefly. It's up 39% rally for Ripple today. So getting back a lot of those sell-offs over. I think it's $1.69 or somewhere in that range right now. So there you go. That's your expensive one, Mr. Rock Lobster. Whole $1.69 for Ripple. Can you afford some of that?
I think. See, that's what I got. That's kind of my deal. I'll buy 1,000 Ripple coins. Can you even buy 1,000 Ripple coins? Can you buy 1,000 Ripples?
That's the whole problem with a lot of this is that everyone's hitting me up with how to buy Ripple, and you got to do it this. You got to first buy a Litecoin or Ethereum on some other venue, and then you go turn around and convert that into Ripple, and that's going to work out well because by the time you're holding those currencies, they lose 35% of their value. So you can't just go directly buy it, which of course means it's got to be hard to sell. It's just the whole thing is just convoluted as heck. But c'est la vie. Uncle Mike, are you there, sir? Any thoughts on Ripple, Bitcoin, and IBM and all this goodness?
No, I think that I really wish that there were options out on this right now because I would love to buy some puts in Bitcoin, quite frankly. I'm going to said it before. I'll say it again. I think it's just a fad. I think that this is going to be the short of all shorts for at least the next couple of years anyway, for the opportunity of it, once there's options out on it. I don't think it would be wise to sell short on the futures by any means, but I think that I'd love to buy some puts or a put spread on it in some way, shape, or form.
Are you saying this might potentially be the big short? Is that what you're saying?
It'll be the big something, that's for sure.
Michael Lewis, I'm sure, won't look askance upon that at all as we keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Time for the Odd Block, the portion of the show we break down weird, wild, wonderful, whimsical, head-scratching, downright bizarre paper. Speaking of bizarre, does it get any weirder than these weird Tesla puts? They keep trading. Guys keep asking us about them. Yeah, they're trading yet again today. Of course, I'm talking our old friends, the Jan 2019 50 puts, yes, 50, as well as our new friends, the Jan 2020 50 puts. And as of today, almost 200 hitting the tape in the 2019 category, total of 36,188 on the OI there. And then our friend out there in 2020 doing 65 today. So some of the more robust strikes in Tesla today can be found in the extreme out of the money puts many, many years out there. Total of 6,730 open on those strikes. So for all of you who've kind of scratched your heads with this, why is this? They continue to grow in OI. So someone's up to something. The game is afoot, as Sherlock would say, and it's up to us to figure out what that game is. So far, we've had a lot of ideas. A lot of you have written in with weird ideas. I don't know if we hit on the exact thing yet. The closest thing is probably someone putting up a lot of these CDSs piecemeal, clearly, a little bit at a time, and then turning them out and hedging them whenever they do. And those things are just so juicy, so rich, they can afford to pay up, what are these puts now? $2.30 on these Jan 2020 50 puts. So, interesting stuff. Speaking of interesting stuff, Mr. Rocklofts, I know this one was on your radar. You wanted to revisit it. This was our old friend, I should say, CurrencyShares Euro Trust FXE. Talked about them a week ago when they kind of lit up with this crazy call palooza, big call party out here. It was the Jan 115 strike expiring last Friday, the Jan 12th 115 strike, which made it interesting for a lot of reasons. The timing and the size, most front and foremost. We saw about 50,000 hitting the tape by the afternoon. A lot of it in small blocks last week, going on prices around about 55 to about 75 cents. Mostly paper buying these things up all day long, total 50,000. And it was weird because the strike, the timing, everything was weird. As we kind of hit on last week, by Thursday, we saw a lot of those get closed out to the tune of around 35,000 hitting the tape for prices around 90 cents to a buck. Looks like whoever put on a lot of these decided discretion was a better part of valor. Didn't want to hit around. But again, he only closed out about 35,000. That left about 11,000 open going into Friday morning. Friday, only about 4,600 traded, so still some went out on this strike. If our friend had waited a day, he would have got a lot better fills. They went out actually trading around $1.92. So he left about $1 on the table 35,000 times. So do that math, listeners. That'll add up. So he did all right. He made anywhere from 25 to 40 cents on the options, depending on where you put them on. But overall, he could have done a lot better if he had just waited a day. C'est la vie. I know, Mr. Rock Lobster, you were tracking. Well, first off, if you have any thoughts on these calls, feel free. And then also, I know you were tracking, was it a strangle out here in FXC that was catching your eye?
I know. I remember, and I totally forgot about it the next day. I was kind of bummed, actually, because it was I looked at that, and it was I think it was the 15, you could about the 15, 13 strangle for a month out for it's like $1.20 or something like that. It was ridiculous. It's probably worth $3 now. So I thought that that was quite a bold currency bet on not a lot of I didn't really catch any soft dollar news. I mean, the dollar's been kind of weak for the last couple of weeks or months or whatever. I think it's at a year low or 2-year low or something like that. So, but whoever bought those was definitely riding the wave, and they scored huge on that. So I did look at a strangle. I did not buy it because, as usual, after I talk to you about this show, and then the next day something else happens and I forget whatever the heck we said. So every once in a while I do grab one of the ideas, but that strangle would have paid big. It'd be like 200% gainer.
So we do here on the show, we live to set up you guys at the Prime Meridian Fund with your next trading ideas. Speaking of ideas, this one actually came, you noticed this one first, Mr. Rock Lobster, because I was busy doing shows while these trades were going up. But you have all this time in the frozen tundra to spot these things, which I like. That's good. Kinder Morgan putting up a size funky strangle towards the end of the day here. When did this go up? Around a little after 2 here. So, yeah, 2:16 or so. So, yeah, later in the day, we saw a pretty sizable strangle. Of course, Kinder Morgan, ticker symbol KMI. Closing today, pretty much $19 even, off about 3%. So not the best day here for Kinder Morgan. I do believe, let's pull up my chart here. Yeah, they had earnings actually yesterday after the bell. So today, feeling still some of the brunt of that. Someone deciding, though, first off, this is a name that does about 18,000 contracts a day. So decent paper, doing 140,000 today. So a little bit more. Of that 140,000, 100 of it coming in this trade. It's a pretty interesting one, Mr. Rock Lobster. They're kind of coming in. Looks like, let me just pull up the data on this really quickly so we can see for ourselves. There we go. Yeah, it was, well, the execution on these is always kind of funky. Someone putting up about 50,000, 49,889 to be precise. About 50,000 of the Jan 2019 18-20 strangle. So the 18 puts and the 20 calls. It has a feel that someone's, you think at first blush, when you look at this, someone's probably buying this thing. OI, by the way, non-existent on both strikes, 10,000 and 23,000. So decent on the 20s, but not clearly this is all opening paper. Interesting thing to note, though, is both these trades actually went up pretty much right on the bid. The puts were $1.39 at $1.50. They went up at $1.40. And the calls were $1.30 at buck 45. So those actually hit the bid. So unless there was some funky execution if it went up a little late, but I don't see any indication of that. So it looks like Mr. Rock Lobster, it is potentially. At first blush, I was with you. I thought it looked like they were buying this thing. But it does seem like perhaps they're coming in and putting on a pretty tight strangle. Remember I said, listeners, this thing closed at 19 bucks today. So if they are indeed selling the strangle, then they don't want this thing to really move at all over the course of the next year. And they're getting, what, 270 or so to put this thing on. So they got a little bit of wiggle room to in either direction. Either they can get down, of course, to the 1530 on the downside, and of course 2270 on the upside. So they got a little bit of wiggle room, but still, the stock went out literally midpoint on that 1901 today and moved half a buck today. So this thing can move over the course of the next this is exactly a year. Next year, that's an interesting, I think the only way to put it is interesting. Let's go pull up the year here, Mr. Rock Lobster. We'll get a better sense of what's been going on in KMI. And they kicked off the year last year right around 22.5 bucks. And they kind of gently drifted down to about 1670. So not exactly a great year in November when they kind of turned around, had a nice rally all the way back up to about the 20 handle, very close to it. And didn't really break it, though. So this thing can move. It is a gentle mover, but it can move, Mr. Rock Lobster. So first off, are you still convinced that maybe they bought this strangle, or are you feeling now that they sold it? And then either way, what are your thoughts on this strangle here in KMI?
I thought the strangle sale was pretty bold after earnings. They're trying to grab a little bit higher vol for this thing. And it looks like they basically sold exactly last year's range. At a higher, I'm just going to say, we'll just call it a little bit more elevated vol than normal. They're selling about 25 vol. I think it's bold. I think it's probably somebody who owns the stock, to be honest, although I didn't see stock to go up. This looks like one of those, I own a lot of the stock and I'm going to try to generate some more income on this, and I don't really feel like the stock is going to crater. And Kinder Morgan's kind of one of those companies that you would do that for. So if the stock keeps going up, or even just does nothing, they're going to come away with, $3 of juice against their $19 number, which would be a good return on one of those trust funds.
That's true. If you pull up the chart, they are with this strangle where it prices out. They're pricing the strangle out a little bit below, actually, the 1 year kind of trough there. So from that sense, you could see some of the logic to it. And it is just ironic that the stock went out literally midpoint of that strangle right now. So it makes it seem all the more glaring right now. But still, 50,000 contracts. I guess if you own some, you want to buy some more down the 16 or 15 handle in this case. I suppose I wouldn't look askance at that's not a bad level compared to recent historicals anyway. And on the upside, they don't mind dumping it out if it gets beyond the upper portion of that range. So interesting stuff. Let us know what you think. I'm going to put this one. We got a year to watch it, but it's going to be marked in our to be watched category here, Mr. Listeners, so Mr. Rock Lobster, so we can come back to it in, let's say, 3 or 6 months' time and see how our strangle friend is doing. And last but not least, let's get on to something a little bit cheaper, a little bit you like our sub $10 names. We got one for you, closing it out with MBIA Inc. This is ticker symbol MBI. This is a financial guarantee insurance business. They do about 11,000 contracts a day. Today doing 48,000. So decent paper here for good old MBI. About 31-1 puts over calls. So needless to say, we were looking at puts. And it came in this pretty sizable put roll. It's like someone wanting to keep the downside hedge, the downside party, call it what you will, keeping that going. We saw our friend out here starting it off with 25,000 of the Jan 8 puts, trading for about 60 cents. Looks like paper probably selling those bad boys. Open interest 32, almost 33,000. So size OI open there. And then turning around, looks like, and picking up 19,000 of a different strike, the March 7 puts. So doing those for 70 cents. We're actually doing it for a dime on this trade, a dime outlay to them. Open interest pretty small here on the March 7 puts. So we got someone could have a size stock position, had a hedge that worked out, wants to keep that hedge going, or someone who's just specking on some downside here in MBIA. I'm going to guess the former here, given where this stock is and kind of how we usually see these types of trades going up. It is interesting that they're doing less size on the second leg, given that when we see these trades work out, and these puts have been on for a while, so I can't say for certain. We went back as far as our data would go, which is over 2 months, and these puts were open at least to them, which is another thing that probably makes you feel that it's probably a stock hedge. This is a long-term put buy here, and at least we don't have the exact price of when they were open, but it does seem like these puts, obviously, given where the stock went out, they probably worked out fairly decently for 60-odd cents. At the very least, they probably scratched, maybe only lost a little bit. So it was kind of interesting that they put on so few, with only 19,000, I think a total of 20,000 on the day. So doing a little bit of a ratio. Usually when a put or a hedge goes your way, or a trade goes away in general, you might do a little bit more on the second leg, particularly when it's around the same price or a little bit out of the money strike. Did not see that in this case, which is a little bit interesting. Maybe they've pared down their stock holdings since then. Could be a number of reasons why that is the case. Looking at the year that's been in MBIA, this thing kicked off the year around $11.50, and they kind of vacillated around, got down as low as about $6, almost broke the 6 handle back in October, and they kind of have bounced around back up to 9. So they've been pretty volatile of late over the last few months. And our friend here obviously deciding, you know what, they get back to that 6 handle. Maybe he should have sold his puts out then, just saying, if he had them on. We know he had them on through early November, so he could probably very well had them on in October as well, in which case maybe these puts didn't work out as well as they seemed. He could have had a much better level back just a few months ago. But either way, he's keeping the put party alive. Mr. Rock Lobster, take us home. What are your thoughts on these puts? Do you think they worked out in his favor? And what are your thoughts on the reduced size of the second leg, sir?
I look at this and it just, because it also was tagged buy ride, it just, because this stock is, aren't they, MBIA, aren't they the bond insurers? You know, they might like insure like municipal bond insurers. It always seems like this stock is just one foot in the grave if, you know, Puerto Rico blows up or something like that. So but if everything works out, then they make a lot of money. So I can understand that you could own the stock and then want to own a lot of puts against it. Maybe they're up enough money in the underlying that they feel like they don't need as much stock or as many puts, but you're kind of still down here, kind of along the bottom in the, like, you know, near $6 at $7.50. But it feels like they are getting more confident with their long stock position.
Yeah, it could certainly be. It is weird that we're not seeing as much on the second leg. Like I said, there could be many, many reasons why that is. Speaking of reasons, it's time for us to reason why. It's time for Uncle Mike to answer if the Skype gods are smiling upon him, because it's Thursday. That means it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, let's see if the Skype hurricane has lifted on St. Charles, if the freight train has let him off at the station, so Uncle Mike could join us to explain why he's getting the heck out of all markets, listeners. You heard him at the top of the show. He is liquidating all of his long positions. He has given up on this market. Uncle Mike, explain your reasons, sir.
I think there might be some type of a loss in the translation with what's going on with Skype, but I will do my best. As I've always said on this show, I am long-term bullish, short-term cautious, and I was actually exercising some caution this week, and I will continue to do so through the weekend. So let me tell you what I did. Going into this week, I was long the 275 call for March and short the 285 call for March. This is a position that I've kind of worked into in terms of initially it was an out-of-the-money call. I've been selling some premium to kind of finance it a little bit, been getting in and getting out of some calls, but this is what the positions evolved into. Earlier in the week, we actually had a sudden increase in volatility the same day that we made new all-time highs in the market. And so on that note, I was kind of getting a little bit concerned just because of the fact that this position that we have is very profitable. And so I was debating as to what ways with which we can protect profits or possibly roll up the call, whatever the case may be. But in looking at what I was doing, the fact that volatility was higher while the market was also higher caught my attention. So what I decided to do was roll down. I was short the 285 call for March, and I rolled it down to the 280 call. And by doing that, I got a credit of roughly $2 on the trade, a little bit more than $2 on the trade. And what that was able to do is for the year, because I kind of just, if you were to base the strategy on where it was on January 1st as compared to today, on the year, we essentially have gotten into the 275, 280 call for a $2 credit. And the reason I say that is because of the fact that all the, for lack of a better term, doing stuff is what has been helping us on the year. So with that being said, we're now in a position to where we've taken some deltas off the table. And the way with which we took deltas off the table was by increasing the premium sale, by rolling down a call option. That was a situation to where with higher volatility, I felt it made sense to be a premium seller in dropping down the deltas as opposed to rolling up a long call or rolling out whatever the case may be, taking some deltas off the table. I am concerned about this government shutdown because I'm not too concerned, but I am concerned. The reason I'm not too concerned is that threat of nuclear war doesn't seem to spook this market. Why the heck would a government shutdown spook this market? But it has spooked the market in the past, so I do want to respect that fact that we will have weekend risk because they have until midnight tomorrow to pass what they need to pass, and we have that weekend risk. So because of that, I feel more comfortable with less delta on the table. Should the market rally and all of Congress come together at the 11th hour and save the day like they always seem to do, the magical way our Congress can find a way to make things happen, and the market increases, I like the fact that it likely won't hurt the position too much. It will hurt it, obviously, because I'm not long as many deltas as I want. But the fact that we will hopefully have a drop in vol if we do rally, that is kind of my saving grace in case we rally to the upside. So for the time being, that is where I am positioned, and I'll update everybody next week.
There you go. So just to summarize, listeners, Uncle Mike puts out an alert. He's liquidating all exposure to SPY. So get long at your own risk. I may have interpreted that a little bit for us. Meanwhile, we got some time, listeners, to get some of your questions. It is time for the mail block.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Like the name implies, this is indeed the portion of the show where we ask you guys some questions. You guys ask us a question. Or two, or many in this case. It's just a question party. Let's kick things off with our first. We asked you guys last week, what do you, just real easy, keeping it easy. What are you excited about for, which names I should say are you excited about the trade here for earnings season? Gave you some choices, Apples, your Teslas, your Amazons, or others. You guys wrote in with a bunch of interesting esoteric names that I've never heard of, which is always fun. But in terms of the big ones, 32%, it was pretty tight actually. 32% coming in for Amazon, 27% for Tesla, and only 21% for the fruit company. Uncle Mike will be quite sad if he wasn't too busy liquidating all of his holdings in anything with long beta exposure to the marketplace. He's going to kill me, but it's fun. And we also asked you guys this week, given the fact that Bitcoin was moving like crazy, and I was chatting with the SIBO folks about the options this week, I thought we'd ask you guys, pass along the question and kind of turn it a little bit, spin it a little bit. You guys are always asking us, when are the options coming? Doesn't seem like they're coming anytime soon, unfortunately. But we do have the futures now, so let's just pretend, let's role play that the options existed. We're not going to make you price a July 10,000 put like someone asked us the other day. Nothing that specific. We'll keep it general. We're just going to say very quickly, very easily, if the Bitcoin options existed when we put this poll out, Bitcoin futures were around 11,500. They're a little bit higher now. We asked you, hey, just if you had a 1 month expiration, you had to buy a 1 month or trade a 1 month time frame, what would you do? Would you buy a 5% out of the money call? Would you buy a 5% out of the money put? Would you sell a 5% out of the money covered call? Or would you just stick with the future and just short the future? So, Mr. Rock Lobster, we'll start with you. What would your vote be if you had one? And then what do you think our audience is voting? Mute button.
And I like.
There you go. I need a little drop for that. I need a song for that. It's just the Rock Lobster's mute button.
It's Tosaw and his noise. I thought I would help by anyway, whatever. I can't believe I look right at the mute button. I go, oh, I got to not mute. Anyway, I'm going to say people want puts and I want puts 5% out of the money in the Bitcoin if the theoretical options were there.
Kind of hard to argue with that logic, Mr. Uncle Mike. If the hurricane hasn't killed you, or if you haven't signed off in disgust from my reinterpreting of your advice, what do you think our audience is picking? What are you picking, sir? You may have a hurricane casualty. Uncle Mike, are you alive, sir?
This is the show with technical issues.
He signed off in disgust when he heard me reinterpreting his views on the market. He's like, that's it, I'm off of this show. He's telling everybody to sell all their long exposure. How dare he? But yeah, actually, Mr. Rock Lobster, I thought this would be kind of one-sided as well, but it's actually fairly split, fairly evenly split, with just a slight majority, 32% coming in for buying a 5% out of the money put, where you were. Hot on its heels, 29% for buying a 5% out of the money call. 26% saying they just want to short the future, Mr. Rock Lobster. And 13% coming up, in the rear, selling they want to sell a 5% out of the money covered call. So interesting, about roughly 2/3, depending on how you pick it, they want to get short somehow, either with the future or with the puts. And the rest want to get long or just sell some out of the money covered calls. So interesting stuff. This just went live yesterday, so you got a few more days for the end of the week to vote. If you haven't, listeners, head on over to @options. Make your voices heard. A lot of you guys already have, but interesting. I did not think it would be that evenly split. Let's see, other questions. Here's a good one. This guy wrote in a while ago. I want to make sure I get him in. He's been asking us a lot lately about this. This comes from P. James Lamar. So put on your options trading platform hat, Mr. Rock Lobster. While I also try to bring back Uncle Mike here in between, bringing some behind-the-scenes magic. Here we go. P. James Lamar asking us. He says, can you guys recommend an options platform for active options traders? I'll try to add a link to what I used to be able to do on my old platform, but I am no longer able to do. But I would like to find another platform that has single click, entry and exit for options. If you know one, please let me know. And he put a link. I actually looked at his video. He has a lengthy video showing it. It was on the Options Hub platform, I believe. What he wants to do is effectively be able to kind of log into the platform and kind of execute, like you mentioned, single click. So you see the bid, you click on the bid, and that automatically populates a sell ticket. Click on the offer, automatically populates a buy ticket. It's pretty rudimentary functionality. I think a lot of platforms have this now, so I don't think it's really he can pretty much, you could throw a dart and hit a lot of the platforms that do have it. The one he was showing was Options House. I haven't flashed E-Trade. I haven't played with it much post-merger. So I don't know. Maybe they took obviously they took that functionality away for them because he was complaining about it. But I'm curious. I know you like, what do you guys use a lot? Lightspeed, Mr. Rock Lobster. Does that allow you to do the single-click execution there?
I'm looking at LiveVol platform or the LiveVol platform at Lightspeed. You just click the bid and it populates a ticket, or you put in the trade on your platform and you just hit create a ticket and it creates a sim to complex and it creates a ticket for you instantly. So it's probably the easiest way to put a multi-leg trade up somewhere that you can see it easily. So this, and Toss does it pretty decently as well. So both those platforms will get you moving quickly. And I know guys that trade a considerable amount of volume on these things. So,
yeah, and I know Toss has it, and that's why I was kind of surprised by the question, because I know this is pretty widespread functionality. Again, I guess except for perhaps Options House, which I haven't tried in a while, so I don't know. But I know Toss. I was pretty sure the Lightspeed Live Vol platform had it. Old School OX did not. Now that they migrated to the new with Schwab, I'll have to check in and see if they have that on there. Uncle Mike, you use a lot of platforms over there, IB and what have you. What do you have any recommendations for our friend Mr. Lamar?
I would say that the functionality you described is pretty common. And from what I remember of the old OX platform, I don't know if you could have done it on the streaming platform, but even on OX, I believe that you could do it on the non-streaming platform. I was pretty much out of there by the time the Extend platform became their go-to thing. But I think it's pretty common. I would just search around for other brokers than what he's using right now.
Yeah, this is not exactly, this is not a rocket science. Like people figured something out a while ago. You want to click the bid, you probably want to sell. If you want to hit the offer, you probably want to buy. Yeah, that's not too hard to, if that's all you need, that's not too hard to find. If you have some other specific, you like to only do iron condors and you want to click one thing and auto-populate an iron condor ticket based on one click somewhere, maybe that's a little bit more specific functionality, but that basic stuff, Toss, Live Vol, a few others, I'm fairly certain the new, again, I haven't played around with the new Schwab one in a little bit, but I'm fairly certain they had that in there in their last iterations as well. So most of your major platforms are going to offer this. We got sent this one by Trading Proverbs. I thought it was kind of funny. It was a Peter Lynch quote. It's a comment more. He says, "More money has been lost trying to anticipate and protect from corrections than actually in them." That's a Peter Lynch quote. I thought that was kind of a funny one. I'm sure someone will have to do the math on that to see exactly how many 5% out of the money SPY puts have expired worthless. But who knows? Maybe Peter Lynch was onto something there. Kind of a bit of a funny one. Thank you for that, Trading Proverbs. We got to keep rolling, though. It's time for our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's check back in with our old friend, the Beamer, the place where I began my auspicious career on the SIBO so many years, coming up on 20 years ago now, which is kind of crazy. And when I was stock clerk and I moved the Dow after hours by accident, hedging some Beamer. And that used to be the big pit on the equities over there in the dark days on the CBOE, listeners. And here it is closing out here. It's down about 4%. So getting pretty much in line. They're pricing a little over 4%, and it's off a little over 4% right now. So lo and behold, the historical numbers were pretty much in line with a little over 4% move. They priced in a little over 4% move, and right now, actually 4.2 is what they priced in. That's exactly what they got right now in the after hours. It's right at 162, so off about $7.12, which is right about where they were pricing in. So fairly well done, it seems like, so far for the market making on this straddle here for good old Beamer. That said, we're coming up on an interesting week for earnings and shutdowns and other things. Maybe we'll start with Uncle Mike before he dies horribly in that hurricane. What are you keeping an eye on, sir?
Main thing is the shutdown. I think tomorrow's going to be an interesting day. I think we actually could have some news move the market. No promises by any means, but we might have some movement tomorrow based on what some people are saying. But for the most part, I think the shutdown's the big news with what I'm watching. Of course, earnings season is. We are in earnings season right now, so I'll be watching earnings coming up in the next week. But for now, the shutdown is the big thing on my radar.
Big shutdown talk. Mr. Rock Lobster, same for you? You got other stuff on your radar?
Nope. Shutdown, trying to see to add if there's an opportunity to add more short vol. It seems like I keep missing every vol rally over the last 2 days. Managed to sell some, but I would like to sell a little more. And as far as earnings go, I mean, it's kind of weird because of the tax law. They're saying, oh, we made a lot of money, but the tax law is going to change things. And so I haven't really seen the kind of knockout earnings that I think the market wants, considering it rallied, 3% last week? So I think that's an important thing to remember in all this.
Yeah, not a bad start to the week unless you're talking cryptos, or to the year, I should say. Unless you're talking cryptos, and they seem to have recovered, at least some of those sell-offs. So not quite the apocalypse, the crypto apocalypse somewhere faring. Well, that's going to do it, listeners. The music means we're done. Of course, we'll be back tomorrow with more shows. Hopefully, I think it looks like the live stream held up throughout the show, so hopefully that worked for you. If it didn't, let us know. Hit us up. You know where to find us. But before we go, listeners, let's go back around the horn one last time. Let's see what each of them has cooking that may interest you. Let's start with you, Mr. Rock Lobster. If I was interested in perhaps, I don't know, learning about VIX, maybe if VIX could be made more difficult for me, how could I go about that?
We have our VIX Made Easy series. It's a 5-part
Oh, I had
series,
that backwards. I'm sorry.
I know, VIX Made Difficult. I could do it. You know what? It's our best-selling thing ever so far. And a lot of people tell me, oh my gosh, it really made it easier for me. I was doing everything all wrong. So that has been very popular. Also, I will launch my vol newsletter, which will teach people how to trade volatility like a professional type person, learning how to pair vol products and stuff like that. I've been using it, great success with our pro clients. So I figured, what the heck, I'll launch a newsletter around the concept and see how people like it. It is not for the beginner. I'm just saying that now. So if you would be a beginner, you just want to actually monitor it for a while and kind of see the groove on how things work. But it's worked out okay. But that launches Feb 1. So those are the big things we got going.
How does one get that vol newsletter? You have to go and subscribe to it at the option.
Yeah, go to just send me a note at andrew@optionpit.com, and then we'll send you the information on it. We have it running now inside, kind of behind the paywall at Option Pit for our subscribers, so they can kind of see how it's going. And the track record is pretty awesome. So it's so far people like it. Let's just put it that way.
So you got to pony up to get the big newsletter, I see. And you also got to buy the VIX Made Difficult. So check that out, listeners, if you haven't done so already. And last but not least, Mr. Uncle Mike, if you are still alive, sir, the hurricane hasn't claimed you. What is cooking in the land of all things RCM Wealth Advisors?
Well, if you're looking through your statements from the last year and you are looking to see, holy cow, I paid a lot of money in commissions to my broker, and a lot of it comes from those ticket charges, give me a call. I might be able to help you. At RCM, we have well over $100 million under management, and we have the ability to negotiate very good deals with very big name brokers. And if we're able to help you, if you trade through us, of course, we do charge a very small fee. That's how we make our money on the deal. But oftentimes the fee is much less than the ticket charges are adding up throughout the year. Give me a call. I might be able to help you. And I will also throw in a $100 Option Pit gift card for if you end up becoming a new client. 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
There you go. Maybe pick up the newsletter. Maybe you pick up the VIX Made Difficult. Whatever it is, you got $100 to spend. Maybe you hang out with the Rock Lobster on his ice rink for an hour. I think he charges about $100 an hour for rentals, skates and everything. And a lot of work goes into that. Check it out, Tosaw at RCMFS, if you'd like to learn more. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, thank all of you out there in the listening audience for doing your thing. You're downloading, you're streaming, you're subscribing, all the other fun stuff you do. We'll see you next week for the option block, but come back tomorrow if you want some vol talk and some all things crypto and commodity talk, because we got you covered on volatility views and on TWIFO, so we'll see you then.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.